Welcome to BizTech's Investor Conversation Show. I'm Brian Fernandez, and today we have a great guest, Manpreet Ratia, the managing partner of Jungle Ventures. Now, Jungle Ventures is one of the largest independent Singapore-based venture capital funds investing in early-stage companies across India and Southeast Asia. Now, with its most recent close of its $600 million fourth fund in 2022, Jungle now has over $1 billion in assets under management, a 100-fold increase since its inception. Now, to tell us more, Manpreet, welcome to the show.
Thank you for having me, Brian. Lovely.
Now, Manpreet, could you give us an overview of Jungle Ventures and its investment thesis?
Thank you for having me, Brian. I think as Jungle Ventures, our investment thesis, as you articulated, is fairly simple. We have one fund. We invest out of the same fund into both India and Southeast Asia, which makes us incredibly unique. Number two is we are super excited with the growth in terms of particularly the consumption, which is household consumption in this part of the world, particularly in India, as well as in Southeast Asia, Indonesia, Vietnam, etc. So anything which is riding off basically the GDP growth or the rising consumer demand or consumption demand. And within that, I would also argue the SME and the small business segment out there is what excites us. If I were to break it up into three buckets, I think consumer brands, new age consumer brands, whether it is a physical product, could be an ice cream, or it could also be a virtual product in terms of a new lending solution or a buy now, pay later solution, etc., is something which would excite us. So we would invest into that. We would invest into the second thing would be anything which helps B2B, which is business to business commerce, which connects large, small enterprises or even the small enterprises within themselves. So it could be technology to enable them. It could be efficiency matrices. It could be platform players. It could also be financing solutions within them. It could be logistics solutions within them. So that is the B2B segment which we invest in. And the other part is obviously software or technology. So anything which is, new age software being built out from here in terms of technology, it could be a SaaS business. It could be a software digitization solution for any of the business problems which is there. It could be low code, no code, etc. That's what we would do that. So again, it's the rising consumption. It is the incredibly attractive demographic profile, the GDP profile. Invest out of the same fund. Invest secularly across both India and Southeast Asia out of the same fund. And three big themes, like I mentioned. One is consumer, the other one is B2B, and then there is software.
Now, Manpreet, you also bring a very unique lens to the fund because you started out life as basically a banker, everything from GE onwards, and then you worked at Flipkart, had a nice exit, worked for Amazon, and obviously now head up Jungle Ventures. Walk us through how that unique cocktail of experiences has shaped you and also then the lens that you now invest.
Again, one thing which makes, and I should have touched upon that, is we pride ourselves at Jungle that we call ourselves operator investors. So we are investors, that's our core business. But at the same time, we take a very strong lens of our deep operating background in terms of what it means to build great businesses. I think two or three things, the nuances of execution or what it means to execute, to build, to scale businesses. The second aspect of that is to understand what I mean. What I would say is what good looks like. So, when you're building something, you need to know what good looks like. So having been there, done that, your ability to translate that, share those experiences, etc., that becomes very critical. And I think it is not only me, but the rest of my partners, as well as the other folks who work within the business, all of us have very strong operating backgrounds. So also having that network. So for example, if we were evaluating a new deal, for example, we invested into a company which is Atomberg in India, for example, which makes new age digital fans, right? We were able to, given our operating backgrounds, quickly dial in, get in the right people, the right experts out there by saying, okay, what am I missing? How should I be looking at this? What is the opportunity, etc. So I would argue that as in the operating background which we bring to the table, which I bring to the table, a lot of my other partners bring to the table, allows us to marry both the lenses, is to say, okay, here's an investment opportunity. Let's overlay our operating experience and see what we can do with this opportunity. And then also let's use our operating experiences to help work with the businesses in terms of growing and building them into great businesses. So that's what we do.
Now, you've been very successful compared to a lot of funds. You've had more than 10 exits. You've What are some of the notable ones that perhaps you'd like to share, and what sort of quantums? I think PaySense to Nespers is one example. Trade Gecko to
Yeah,
Intuit is
yeah,
another
yeah,
great example.
yeah.
Could you share some insights into these success stories, and what sort of returns did you make for yourselves?
I think on the returns part of it, we can come back to you on that. But
Okay.
let me assure you, I made significantly, or we made significantly more money than what we put in all these deals. So that's number one. Number two is, I think you talked about exits. I think everyone talks about exits, right? Let's understand that the last 3 years have been huge disruption. There was the initial disruption with the pandemic, which impacted operations of organizations, the ability to get deals done. People had to find a new way of even getting stuff done. Imagine trying to consummate a deal where you never meet someone face to face, right? So they had new challenges which were being brought in, right? And the second thing is that the markets itself have been recorrecting, right? So there have been
Yes.
pressure in terms of valuation, etc., which is there. So I see it as three years of literally black swan event, right? It is like if you are a startup, you have significant pressures in terms of operation, revenues, funding, etc., which is there. Then at the same time, there is also questions being raised upon what is the right valuation benchmark. We are incredibly proud of these two exits which we did. Let's not forget they were consummated in the time frame of 2021, right? And 22. And this is the time where the markets were shut. People were not moving anywhere or here or there. And for us to be able to drive these exits virtually during the pandemic is something which we are super excited about. The other one you did mention PaySense. I think the other one we can be super excited about is Trade Gecko, which we also exited to Invit. And then we've also had some other smaller exits, which is there, right? So for example, One Animation, which is one of our very early investments, doing very well, an amazing asset which they created, or a media asset which they created. So some really great stuff which is there. But so again, amazing journey so far in terms of our exits. And like I mentioned, tough market environments, incredibly tough market environments. And I think we and the team at Jungle can take a lot of pride. And I know our LPs take a lot of pride that despite that, we were able to at least execute on some exit options.
And I want to come back to the tough environment, and what the environment looks like moving forward. But I want to first talk about also some of the unicorns in your portfolio. So you have got unicorns like the latest one being Builder.ai. Um, and then you have Credivio and
But
Lipspace as well, and Moglix as well. Can you
yeah,
tell us about those, and how they've been growing since you've invested in them?
yeah. No, amazing. I think, we at Jungle take great pride in the fact that our first institutional fund was maybe 2016, 2017, right? So that gives us what, 8 years since then, if I get my maths correct. And since the time where we started deploying capital at scale over the last 4 years or 5 years, we've managed to build out a unicorn almost every year. It is important to note that the last unicorn which we did, which was Builder.ai, it's a truly global company. It falls within our software investment thesis, which is there. It grew out of India, but right now it does almost 60 to 70% of its revenue outside of India. I think it has got almost 50 to 60% of its staff, which is global in nature. It has been growing amazing, almost 5 times in terms of revenue, etc., which is there. And the round got funded with some amazing incoming investors which came in last year, right? Which is QIA, etc. So again, I would always challenge people that within a 7 to 8 year time horizon as a fund to build out such increasing, not only regional players but also global players across different segments, right? So you talked about Credivo. Credivo is our buy now, pay later solution in Indonesia. It is the largest out there in Indonesia. It recently had its valuation uplift last year, where Mizuho came in a significantly big way. It has now expanded into Vietnam. I think the operations are doing pretty well. It has started getting into and has got a banking license. Then we look at Moglix. It's a B2B platform, again, operating out of India, but has now got a significant play in the Middle East, which is there. And then there is LiveSpace, which we always talk about, which is, direct to consumer platform in terms of making things, which is there. So two things which stand out and maybe you're picking up. One is there are across various sectors. So there is software, which is Builder. There is B2B, which is Moglix. Then there is LiveSpace, which is direct to consumer in terms of a platform, which is interior design, etc., which is there. And then there is fintech, which is Credivo, right? The second thing which stands out is that all of these businesses, some of them are global in nature, truly global, like a Builder. Some of them are regional in nature, for example. Like a Credivo falls into that bucket, a Moglix with its Middle East expansion, a LiveSpace with its presence in Singapore and in India start falling into that bucket, which is there. And the third thing which comes up is that we seem to have a track record every year that we manage to get a business up there. Again, a lot of thanks to the teams out there and the founders who build these things. But I think we can take pride that we were very early investors into some of these companies. So somewhere our playbook of investing seems to be working.
Now, Manpreet, you're obviously picking the right horses, and also you're picking them not just in India, not just in Southeast Asia, and then you mentioned also it's a 50-50 split essentially. Is there any fundamental differences between Indian entrepreneurs and Southeast Asian entrepreneurs? Because a lot of the narrative is that Indian entrepreneurs tend to be very globally, have a global mindset from the get-go versus Southeast Asian entrepreneurs who tend to be perhaps only local or regionally focused. Is that really the case? Is that what you're seeing?
I would argue, and I think I mentioned that before, my firm belief, and I think people at Jungle also tend to believe that way. An entrepreneur anyway in the world is largely the same, right? It's an entrepreneur who has an ability to take risks. It's an entrepreneur is someone who understands how to kind of manage the risk. An entrepreneur is someone who has an ambition, an entrepreneur who has conviction about what he's going to build. An entrepreneur has the ability to take that ambition and translate it into execution. I think in all these parameters, honestly, my view is I don't see much difference between the Indian entrepreneurs as well as the Southeast Asian entrepreneurs. I should point out that we have one fund. We don't have defined ratios about how we invest. If we see a great opportunity, we put in money. And the fact that across various funds, we've always ended up somewhere around 50% or equal share going into both India and Southeast Asia. It can be that there are days or there are years where percentages may go up. But cumulatively, it then tells you that, look, there is no difference, right? As early stage investors, one of the core thesis is underwriting the founders. So, I would argue there's not much difference between them. If there is a difference, it's probably around articulation. That's okay. We understand that, the difference which is there. The second thing I would argue is that in Southeast Asia, I think let's not forget that sometimes we talk Southeast Asia as one big market. But, if we go down to the next level, then, if you're building out, let's say, a logistics business, or if you're building out like a Where Six is, or if you're building out, for example, a new age hospitality company like a Red Doors, right? Or if you're building out, let's say, a financing or a consumer lending business such as Credivo, Indonesia is different, right? And Vietnam is different, and Thailand is different, right? So I would not be so harsh. Just building a regional play out here, you still have to deal with almost a similar level of complexity as, let's say, an Indian entrepreneur would have, right? So that's my humble thesis. But I'm happy to be corrected. But that's my belief, and that's basis my interaction with a lot of founders which I see secularly across both India and Southeast Asia.
Now, Manpreet, I want to come back to the difficult times over the last 3 years. As you said, multiple black swan events where we had a peak of funding in 2021, but now we're in a funding winter. What does it look like through your lens in terms of the startup ecosystem in the region? Have we bottomed out and because there is a lot of dry powder sitting around waiting to be deployed, have valuations come down to a point already when investors are starting to bite and saying, hey, I think it's a time to start nibbling?
Yeah. Uh, you know, yes, and let me kind of articulate why, right? The last 24 months have seen absolute pandemic in the public markets, particularly when it comes to new age tech. The markets have been incredibly cruel and brutal in terms of how these businesses have performed, particularly in the public markets. Why do I reference the public markets? Because the reality is that public market pricing is what tends to set the pricing benchmark downstream. Even as early stage investors, there is a part of me which thinks, how is this asset going to get priced in the public market in the next 8 to 9 years? And so we go and look for indications and comparables,
Of
right?
course, that's how you do your modeling, right? You've got to make
Absolutely.
money.
Absolutely. Spot on, spot on.
Yeah.
Now, if I were to look at three relevant public markets, which are relevant from a India and Southeast Asia perspective, I would argue one is India, the other is the Indonesian stock market, and the third is US, right? Because there are some companies from here, CI, etc., maybe one or two within my portfolio, who would consider a US listing, right? Now, last 2 years have clearly demonstrated that if you go too early with the wrong financial parameters, the markets are going to be incredibly cruel. I don't want to take names, but we know enough and more stories of companies which have listed and how they performed. On an average, if I look at that cohort of companies which listed, let's say in the 2021, 22 timeframe, they are on an average down 80, 85% on the price. But there is a silver lining. The silver lining is if we look at the learnings from those listings, which have been applied to the latest companies which have gone out public, both in India as well as in Indonesia and in Southeast Asia, most of these guys have performed about 50, 55% up from their listing prices. So clearly, after all the turmoil in the market, the new pricing norm has been set. And let's call a spade a spade. Some kind of profitability matrix matters, whether it is an EBITDA or whether it is, people are not even talking about show me, profit after taxes or depreciation. People are saying that at least show me some EBITDA, right?
Yeah.
And if you are able to demonstrate that EBITDA, I think the pricing about how these public market prices these assets is set. So for the first time over the last 2 years, I would argue there is clarity. Why is this clarity important? Because it helps unlock a lot of pricing related conundrum conversations downstream. So over the last, I would argue 3 to 4 months or 6 months, as we have conversation with follow-on late-stage growth guys, whether it is private equity or whether it is late-stage sovereigns, etc., which is there, I think they have certain clarity and conviction about pricing these assets. So that's number one. So pricing is set. People know how to price it. It was not true, let's say, 2 years ago, right? The only thing which needs to change is the funding. Now look, the rates are what they are, right? If any large scale M&A has to happen, for example, there is always debt. US dollar debt is at an all-time high, almost 10% leverage bank loans, right? But the silver lining is that we do think, and there is enough of material which is out there, which says that the rates will start coming off, right? So my sense is you will see a lot of unlocking in terms of M&A activities towards the end of the year as rates, because the pricing is set, people know how they should be looking at pricing. Otherwise, there was unclarity. Hopefully, the funding will start getting addressed. I won't be surprised if there is a bit of a Fed rate cut over the summer. The inflation rate numbers are kind of more or less stable in the US. That will start unlocking some of the stuff which is there. And I think what it means to succeed in the public markets, the market is very clear, right? So it has been harsh and brutal, but I do think that at least there is clarity in terms of rules. And so once the rules get clarified, then at least we all know what to get done. At least my portfolio companies know what to get done. And, touch wood, a lot of them are tracking very well against them. Long-winded answer, but what I'm saying is markets were brutal. New pricing norms have been set. The flow down impact is going to unlock and also bring everyone to the same page how to value assets. The only little missing thing, but which hopefully I have more conviction than a lot of others, is that I do think rates are going to start coming off and easing from, let's say, with summer onwards.
And given that what you've just said, what advice would you give startup founders in India and across the region?
Yeah. Again, depends upon the state which you are in. I think there's been a lot of talk, and you may see a lot of me also out there in the market talking about profitability and banging on the table about it. But let me add another lens to that. If you are getting into the public or if you are hoping for an exit in some form or the other, profitability matters, but showing some kind of growth is also important. So look, I'm making it trickier. So it is not about just saying that, hey, I become profitable, but I've actually gone down on revenue. Yeah, fine. You will still get something, but the people are not going to get super excited about it, right? Uh, so what I'm saying is that, look, people are looking for growth businesses, but people still want to see the upside. The upside is only when you can demonstrate is to say that, look, there is growth. You can't say I'm profitable, but my revenue is flat for the 4 years, but think of it as an investor. You are saying that, okay, so where's the upside, right?
So Manpreet, essentially what you're saying, and I'm going to be brutal about it, is flight to quality.
Absolutely, you are spot on, and that kind of ties up, and that gives us some vindication. And I would urge all the listeners as well as you, Brian, to go and check out all our historical statements as we at Jungle have put out. We believe in build to last, right? So when you build a company, you build it to last, and build to last is built on the foundations of great operating rhythms and good set of numbers and margin. It's that's reality, right? So.
Manpreet, it's been a fascinating conversation and very enlightening, in its honesty. But before we leave, any final thoughts you'd like to leave the audience with?
I think the final thoughts is that, we are super excited about this region, right? And we always have been. I think my sense of excitement for this region is probably 3 times or more than when I started off with Jungle, let's say 4 years ago. And I will urge everyone to just look at maybe 2 parameters. Go and look at household consumption as a percentage of GDP in both India and Indonesia and compare it to the best in the world. I would argue that India is probably number 2 or number 3 and Indonesia is number 4 and number 5. And the best in class is the US. What does that tell you? This is where the business is. This is where great new companies are going to get built. This is where we have a huge opportunity, both in India and Southeast Asia, where we will build new age national champions. We still have a huge runway. There's huge opportunity out there. We will build out regional champions. There will be more and more grabs and gotos which will come out in this part of the world. I would argue we've already given you guys one more, which is Credivo. We promise to give you a few more. And there are also going to be new age global organizations which from their DNA will be in this part of the world, which will get built out. I would argue that we've also given you one which is there, which is Builder, and we look forward to giving you more, right? So again, excitement 3x. Just look at basic numbers. And if I was an investor, I can't think of any other place than I would rather be than investing in both India and in Southeast Asia.
Manpreet, thank you very much for taking your time to be on the show.
Thank you, Brian. Lovely, and thank you for having me.
Now, we've been speaking to Manpreet Ratia. He's the managing partner of Jungle Ventures. I'm Brian Fernandez, and you've been watching and listening to BizTech's Investor Conversation Show. This show will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.